Hi, good afternoon, everybody. This is Dan Sheridan on a quiet Saturday, so we can talk and the market won't move as we're talking, which is nice, considering how volatile it's been. Today, I want to just address a couple questions. How how an option trader may look at market movement. Where do they think, where could SPX go next week? Um, Type thing, and how we look at it. And then how do we make a decision? What trade to do. And this is generally, uh, not all option traders do it the same way, but just kind of how I look at it. Um, I traded 20 some years at the Chicago Board Options Exchange in Chicago, and then I've been in the retail uh, sector teaching option trading, mentoring for the last 20 years. And this is at least how I was taught and how we were brought up. And it's not wrong how some people look at the market. Some have skills that I don't have, technical, or a lot of market makers, a lot of technical stuff. But this will give just a little insight how market makers, how option traders look at market movement, and could something move a certain amount, and how we might structure trades, and what we might do. And just looking at the current market, we closed at 55.80 on Friday. What could happen? On April or March 31st is Monday. Can we go to 5,500, 5,400, 5,300 on Monday? Let's look at that a little bit. So I want to delve into, first of all, let's take a look at Monday. And we look at Monday, which would be March 31st. And I'm on Thinkorswim here. As you can see here, it says plus or minus 71. What is that? Plus or minus 70, 71 points. What does that mean? They call it an expected move. It's basically one standard deviation. So they're saying, based on the close Friday of 55.80, there's a 68% probability, basically, that we'll be between 55.10 on the downside Monday and 56.50. Now, could we move lower? Could we move higher? Absolutely, it could. But, that's based on real option prices, real uh, participants with live dollars on the line. Yeah, that's about a 68% probability we'll be between 55.10 and 56.50. I was reading, or I was looking over the weekend, a well-respected technician, trader, and he said, well, we could go to 5,500. Well, my first thought as I'm looking, well, what's the probabilities? Well, that's definitely, there's a 68% probability will be between 55.10 and 56.50. So 5,500 is on the board. Now, a couple bit more things to discuss here. You have the term called delta. So if I put in 5,500 and by Monday, right? If I put 5,500 in, it says the delta is 22. Different definitions for delta, but one of them is, okay, here's March 31 option. It's the 5,500 strike. Well, it says there's a 22% probability that there's only a 22% probability we'll finish under 5,500 on Monday, right? 22%. Yeah, could you have a huge outlier? Yeah, but there's only a 22% probability we'll finish underneath it. Then there's another term that is used, probability of touching, which is about twice that. And it says there's about a 44% probability we could touch 5,500 on Monday. So is that doable? It could, but that gives a little more context. And the other thing, I look from week to week. If you look at last week, for instance, if you look at last week, okay, we closed last week at, or we closed Friday yesterday at 55.80. Well, what was the expected move for the week? Well, let's see what we did. We closed Friday at 55.80. Where did we close the previous Friday? Well, we closed at 56.67, right? Yesterday we closed at 55.80. Well, what's the difference? 87 points. Was that within the expected move? Yes, it was about the second or third week, I forget, that we finished in the expected move, right? And so you say, how does that information help you? Well, if I know we're going to finish within the expected move 68% of the time, it gives me a lot of guidance how to set up a range bound trade or any type of trade, right? Doesn't give you the direction, but it gives you a good probability where it will be. And when we were moving around uh, crazily recently, this big down move, the correction, 650 point correction that was in uh, started at the end of February and then early March, 650 point move on a week to week basis. I think we had 3 weeks where we finished outside the expected move of 100 whatever points. And again, remember the expected move, the standard deviation formula is, you have the VIX in here. So the higher the higher the VIX, the bigger the expected move. That's why this week, if you look at the expected move from Friday to Friday, it's going to be bigger. Why? I mean, so if you look at here's April 4th, next Friday, 140 points, right? So why is it much higher or higher than it's been the last few weeks? Because VIX is higher, the volatility, the input is higher. So they're saying about 140 points. So what are they saying the expected move is through next Friday, right? And we can check on that. Well, we're at 55.80. So the lower end of the expected move, 140 points would be 54.40. The upper end of the expected move through next Friday would be 56.80, 57.20. And that just means there's a 68% probability we'll be within here. And we've been in the expected move 2 or 3 of the last weeks since we started to calm down a little bit. So that helps me a lot in making decisions, making risk management decisions. And then that's the first part of the equation. And then, I think technicals are helpful. I mean, I'm fascinated by technicals. I'm trying to learn them. I think that's another tool in the toolbox that could help be a better student of the game, a better trader. But I think, for these market makers that I was involved with, technicals were important, but volatility was more important. Volatility and risk management were the two main things. Now, taking that information last week, you might look at, okay, the volatilities are up, okay, in the upper end of the range normally. What would be a type of strategy? I'm saying, well, what type of strategy that would benefit if volatility is up? Expecting it, if it's in the high end of the range, to revert back down, kind of to the mean. And iron condor is one of those among many strategies. And here's just a sample of an iron condor. This is about 27 days out, April 25th. And in this particular example, I think I chose maybe a 19 delta to pick the short strike. And I think I used an 11 delta to pick the short put. And the current price, 55.80. So when the VIX goes up, how does that affect, when the VIX is higher, how does that affect my iron condor entry? It just means I get a lot more room, a little better credit, but mainly I get a lot more room. So for a 27-day trade, if I put this on today, obviously it's a Saturday, I'm getting 280 points to the short put for a 27-day iron condor. On the upside, if I put it on today, on the upside, I'm getting, what is that? 290 points to the short, right? And now in this volatile environment, can this handle it? Yeah, when you go out 27 days or something like that, and you get a higher volatility, it can handle some of this. But the key to remember is, this is a range bound trade. So normally, I would probably wait myself till, Monday afternoon and see that we get some two-way. If this continues down Monday and we're at 5,500 or something, I would wait. We're not getting any two-way at that point. But this type of trade, you can see the gamma is very low, minus 0.01. What does that mean? It just means if we had a 2% move Monday, which is about 110 points to the upside, which would be under 5,500, it would be 110 points to the downside. My deltas change very little. And the reason you lose money generally on option trades is your delta, right, goes against you. And this can handle the heat. So that's just a little bit today on how market makers or people who are brought up in that environment might look at market movement, and then how they pick generally strategies. Doesn't mean that's, this is on Mount Rushmore, but this is just, this is how my experience, being 20 years or so at the Chicago Board Options Exchange. So uh, uh, appreciate it, everybody. Thanks. If you're check us out at Dan and Sheridan Risk Management. We have a new class starting next week on Tuesday at 2 p.m. where we trade live together. It's called a plan to make 10% a month. And it's just something where we're working on trades together. It's not an alert service. We're working on trades together, talking about it, working through good and bad times. And we also have live classes during the day. So folks, have a nice weekend. Hope this was helpful to you, and we'll see you next time. Thanks.